The following is a presentation of TFNN.
We're going to go to Tom in Colorado, who has been good enough to hold. Tom, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you?
Good. How are you?
I'm doing great. Good to hear your voice.
Yeah, you are Mr. Happy, I'll tell you.
I love it. I love it.
Hey, Steve, I've been listening to the station for over a few years now.
Yes.
And I'm a first-time caller to your show. And I'll tell you, I love the way you break down the charts and explain things, your patience with the callers, the way you articulate the Fibonacci's and what have you. I think you do a great job. You're a great addition to this news network.
Well, thank you very much. We really appreciate that. Really do.
Yeah.
I can change the world. I'll be the sunlight in your universe. You would think my love was really something. Maybe if I could change the world.
Let's go to Dave in Boston. Hey, Dave, what's happening?
Hey, real quick, Steve, I got to tell you, man, you saved me yesterday because I had covered my short positions when I saw that mini rally and then they tanked the market, and then I didn't know whether to reshort at the close. And then when I got your video update, you totally gave me a game plan, and boy, did it work out.
Oh, that's great.
Kudos.
That's great.
Kudos, man. You were right on that.
Thank you. Thank you.
And even after it came out last night, they reported that they had failed, and then the futures came down.
That's right.
And then they went up again. So,
That's
man,
right.
you were right on that.
Change the world. I would be the sunlight in your universe. You would think my love was really something good, baby. If I could change the world, baby. If I could change the world, baby. If I could change the world.
Let's go to our first caller. Let's go to Susan in Boca Raton. Susan, thanks for calling.
I just have to say one thing. I just recently subscribed to your Mastering Probabilities.
Oh, thank you.
You have put so much time and effort in it, and it shows.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 9th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go look at one of our tools. This is the tool I call Lost Time is Never Found Again. So let me start off the morning by asking you this question. I mean, questions, they do control our focus. If you had a bank that deposited $86,400 in your account each morning, I mean, right now, at 9 past the hour, no strings attached, would you open up an account? Would you sign up for one of those accounts right here, right now? Now, the only requirement by this bank is that you have to spend each penny within 24 hours. That's the only requirement in order to get one of these special accounts. So the question is, will you sign up? Will you take on the task, the responsibility to spend, to invest, and to give to others a portion of your $86,400 each day? Are you ready to sign up? If you are, say yes. Well, folks, I'm here to tell you there is such a bank, and each morning it credits you with 86,400 seconds, and each night it writes off your unused seconds. It burns the record of the remaining time left. If you fail to use today's deposit, the loss? Well, the loss is yours. There is no drawing against it tomorrow. You see, you must live in the present, and you must live on today's deposit. That is always the real beauty of being present. So the question is, what's more important to you, time or money? Which can you get back? Now look, if you selected time as the most important thing, then don't let time simply slip through your fingers. Don't let it slip through your hands, because you can't get it back. Whereas with money, you absolutely can. Link the known to the unknown. Look, the quickest way to learn anything, The quickest way to learn. If you're trying to educate somebody, the quickest way is to link the known to the unknown. Perhaps if you think of time as a bank, then you'll invest it in health, in happiness, and maybe even service to others. Perhaps you will take just a few moments and you'll write down each day what your outcomes for the day are. Perhaps you'll take a leap of faith and maybe even invest in yourself. Write this down. Write this one thing down. You must govern your clock, not be governed by it. You've probably heard this. There's an ancient Chinese proverb. It goes like this. An inch of time is an inch of gold, but an inch of gold cannot buy an inch of time. Time, folks, it is our most treasured resource. Use every minute of it, because if you don't, guess what? You will lose it. Here's the deal. Waste 1 hour each day, live to be 90 years old, and guess what? You've just wasted nearly 4 hours of your life. Well, let's not waste any more time. Let's go check out these markets. Let's go see what they're doing right now. Dow futures up 25 points, trading out at 14,738. ES Mini up 4, trading at 1654. NASDAQ futures up 7.5 points at 3158. Russell 2000 up about 3 points at 1048. King Dollar on the move this morning, up 348 ticks, trading out at $80.48 out there. The British pound, that is getting a little bit of pounding this morning. We'll take a look at the currency market, certainly the euro, the Japanese yen, the Great British pound. Goldilocks down $15 as we speak, trading out at $13.09. Silver off 46 cents, down 2% this morning, trading out at $21.98. Light sweet crude pulling back. Can't get over that resistance of that trend line. It's trading out at 102.73. Natural gas pulling back. It's got its own trend line issues as well that it has to contend with. And in fact, we're going to talk about trend lines, channel lines, anything else that you'd like. All you have to do is give us a call at 877-927-6648, and we'll be happy to answer your question. A quick peek around the globe. Let's see what we've got going on. Over in Asia, a little bit of a mixed bag last night. You had the Shanghai up 14 points. That is trading up 0.6%. The Nikkei up 1% last night. Fought off the handoff that the U.S. markets gave to it, up 143 points. The Hang Seng took back that 143 points and closed down 144, off 0.6%. Over in Europe this morning, the DAX, and the DAX is a really interesting stock chart. The DAX is up 13 points right now. The FTSE, that looks pretty dismal. That is trading down 6 points right now. So we'll take a look at those worldly charts as well. But let's start off the trading session here by let's take a look at the present. Let's stay in the present right now and see what we've got going on. I've got that EKG, the 30-minute chart of the ES Mini. What we can see here is that it came off of the bottom yesterday's, it actually made a little bit lower low coming into the time period of 5:30 last night. Yeah, the ES Mini get down to a low of 1646. Now, it had spent quite a bit of time in that oversold condition, and it had to work that off, and that's what it did. We saw a bit of a bounce out here. You know, some folks are calling it the Yellen bounce. You can call it whatever it is. There was actually an indication at 2:30 in the afternoon that what we would see is a market bounce. There was an indication, not yesterday, but the day before, that we would also see a market bounce within 2 trading sessions, 3 at the worst, which would be tomorrow. So to actually see a bit of a bounce going on, and yes, it is a bounce. It is not a market turn. It certainly is not as of yet. So we see here on the EKG, we can see that the oversold, it's not overbought, that's for sure. The oversold condition has been worked off. So it's on the 30-minute chart, it's neither overbought nor oversold, so it can go in either direction. At this stage, coming off the low at 1646, the high that was put in took place here this morning at about 5:30 a.m. That was up at 1658. It's done since that time frame. It's come very close to doing a 0.618 retracement. At 1650.75 really would have been the number. 1651.75 was the low that we have seen so far. So very possible that what we're seeing here is an A to B equals C to up. If that's the pattern that unfolds here, that A point's going to be the low at 5:30 yesterday, down at 1646. The B point will use the high at 1658.25, and the C point would be the pullback. That would give us a 1667 type projection out there. And I suspect that's really what it is that we're going to see unfold. You may say, why would you say that, Steve-O? Well, I'd say that for a couple of reasons. Number one, let's really take a look at the 120-minute chart. Let's go ahead and let's step up. We're going to step up in time frames to get a feel and a view of what's really going on. Now, when I stepped up 4 times. I figure if you go from a daily chart, you go to a weekly chart, that's 5 days. If you go from a weekly chart to a monthly chart, that's about 4 times 5, right? You got 4 weeks in a month. So 4 to 5 is the time frame that I like to use in stepping up, stepping down. So 30 minutes times 4 or 5, and we're going to go ahead and use 4 out here, 120-minute chart. That's what we've got on the screen. Now, that 120-minute chart, it's got a beautiful descending price channel. It depends on what you consider to be beautiful. I think with regard to stock patterns, it's beautiful. How is it? Because that rising price channel, if you go back and take a look at yesterday's archive, how is it that price actually stopped at the bottom of the descending price channel out there? Yeah, certainly, as this price channel was being built out here, it didn't know anything about Yellen. So how is it that price stopped in that area? Of course, what we can see here as I blow up this on the screen, you can see, it stopped dead in its tracks right there. Of course, it was also moving into that extreme on the 120-minute chart, extreme oversold condition. It had no choice but to work that up. It had to work that up. And how did it do it? How did it do it? When you pay attention right here in that 120-minute time frame that took us into 7:30 in the evening, how did it do it? Yes, it did it with a wide-ranging bar. As I measure bars there, if we go from 1 to 10, let's just say 10 is the strongest, that's like a 9. It's a 9 out there, coming off of yesterday's low. So why is it that likely we're to see a move to 1661, maybe 1667 out there? Well, we came into the 0.382 level with a wide-ranging bar, a very strong session. Markets don't end on strong bars like that. And we'll see that when we take a look at the flip around, we take a look at yesterday's down move, because markets don't end on bars like that. It works in both directions. Remember, you need to stay present in the time frame. We're just simply utilizing multiple time frames to get an idea and get a picture of what is likely to unfold. That doesn't mean that it's going to hit 1661 to 1667, but with the information that we have at our fingertips right now, that's the call that we would make. Just small-bodied candles as it hit that level, came into the 0.382 area, so now we're looking at, if we pull this back here, it could very easily make its move all the way up to the top of that descending price channel. So for those of you that have not taken a short in the position, and if you were looking at this chart, and if you had patience out there, where is it that you would think would be the best place to put on a short position? Doesn't mean it has to happen today, but wouldn't you like to do that as it hits the top of that rising price channel? Certainly yesterday, as the market was moving down, if you had this price channel in place, would you really have wanted to be doing the selling as you came into the 4 o'clock time frame or the 4:30 or the 5 o'clock time frame? I don't think so if you would have had these price channels on your chart. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and congratulations to all the Boston Red Sox fans out there. They went ahead and they took the series from our Tampa Bay Rays out there. Their season coming to an end, but a nice season indeed. The Tigers, the Detroit Tigers, go Tigers. They live to see another day out there, so I believe the next game, the final game, Game 5 is tomorrow evening, like about 8 o'clock or so. So that should turn out to be a good game. That was a back-and-forth game out there, as they should be. Now, let's go back out here to the markets. We went from the 30-minute to the 120-minute chart. That helps us to get a feel and understand what's going on. When we left off, I was talking about that wide-ranging bar coming in to that 0.382 level. Not a guarantee, but it gives you the idea of strength, and markets do not end on those types of bars. Now we're just simply going to step it up to the daily chart out here. So we'll go from the 120-minute chart to the daily. We can see that wide-ranging bar on the way down yesterday. What stopped it in its tracks? Well, number one, if you were to put the daily with that 120-minute chart, what would have lined up was the bottom of that descending price channel. And on the daily chart, the 0.618 retracement level, a normal level for folks to actually be able to get off of an elevator. And the 618 retracement I'm referring to is from the low, from the bottom of the swing point from August 28th. That price was $1624.75, all the way up to the high that was put in on September 19th, out at $1726.75 out there. $1646.50 is the number, the actual close yesterday. 1646 and a quarter. How does that work? Isn't that a beautiful thing out there? Now, if we take a look at these types of wide-ranging bars, we'll get rid of the retracement here for the time being. Last time we saw a bar like this on the way down, you'd have to say, I'd have to come all the way back here, maybe in the time frame August 15th. We certainly saw a bar like that. That was not the end of the move. We saw another bar like that on August 27th. Now, when I say that markets don't end on bars like that, that doesn't, what it means is that you get these little timeouts typically. Timeouts, a bounce. Now, there's different elements that give you indications of a bounce, but knowing that you came down into a descending trend line, knowing that you're in the 0.618 level where people will get off the elevator, just simply the fear and greed, just the way that other investors utilize these techniques as well, it would only make sense. Now, what we also can see here on the daily chart, knowing what we do know about channel lines, about trend lines, a channel line here inside the ES Mini, this is going back to November 16th. So what we saw take place yesterday, not good. Not good at all. Because that's been a strong trend that has been in place. That trend just got the penalty marker. It got the flags thrown at it yesterday when it breached that area. And it breached it with wide price spread, accelerated volume. It had the whole 9 yards out there. When a price channel is broken, when a trend line is broken, and now putting all this stuff together, the likely outcome is that what price will try to do is prove that it does not want to get back inside that channel. And it'll do that by getting back up to the top of that channel line. That is likely. And if we go ahead and we were to line that up, now as far as what that price level is, it's probably in that 1666, 7, 8, 9, 70 level out there. So if we go back and we take a look at the 120-minute futures contract and you're trying to figure out, and you are decidedly bearish out here, and you're trying to figure out where is it that you put on that position, there's no question that the best reward to risk would be to have the patience and see if the market can bounce up into that level, into the top of the trend line. The cool thing is, in both of these instances, in being able to utilize these charts in this fashion, in this way, on multiple time frames, is that if in fact, on the 120-minute chart, it breaks to the upside, and it breaks this descending price channel that's been in place since the top out here on September the 19th, that'll be one confirmation that, guess what? The change in trend may be shifting, because once this price channel gets broken, it also will have to be tested, meaning price would have to come back down and test it and determine that it does not want to get back inside the descending price channel. And you'll be able to put this together along with the daily chart as well in order to be able to understand what's going on, because what we'll likely see at the same time, if this were to occur, is you would see price get back inside the rising price channel. And if you see both of those things take place simultaneously, that will be producing a big message. Likewise, a rejection of this area, that could just be setting up a huge A to B equals CD down. Certainly a move lower, certainly a move into the June 24th area, just as the Dow is testing the June 24th area. So look, folks, I'm not asking you to trade futures, but if you really want to be able to understand the message of the markets, you've got to get access to it. You've got to be able to put these charts together, because it will assist you in all of your trading decisions, just as I like to do each day, each morning, here at the wonderful TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 2 points. Trade out at 14,778. S&P up 1 at 1656. Composite up 2 at 36.97. Russell 2000 up 2 1/4 points at 10.49. Apple up $1.44. Microsoft up 2 ticks. Google up 13. Cisco up a penny. Intel up 11 cents. Leading the charge to the upside is Men's Warehouse, getting a buyout offer from Joseph A. Banks. I believe that has been rejected. Nonetheless, it's trading up about $9 right now, 25% out at 44.21. YY Inc. I believe that's a Japanese entity a Chinese entity out there. That's trading up 6% this morning, up $2.55. Joseph A. Banks Clothier up 5% this morning, up $2 and change. You got Apple up $1.50, Baidu up 88 cents right now. Anadarko Petroleum, APC, up 1% this morning, up $1.18. Michael Kors, KORS, up 94 cents. To the downside, you've got Ariad Pharmaceuticals. Oh, my goodness. This is blown apart. What is behind this news out here? Down 67%. Let me see if I can find the news story on this. So let's see. Today announced results of its review of updated clinical data from the pivotal PACE trial. And that can't be good out here. And actions that is taken following consultations with the U.S. Food and Drug Administration. So let's see, with a median follow-up of 24 months, serious arterial thrombosis occurred in 12% of the treated patients out there. So that does not sound good. And this equity here is just blowing apart. ARIA is the ticker symbol. Learn LRN, K12 Inc., that's down 28% this morning. I would say that's blowing apart as well. I just see a downgrade alert on that. Netflix off 2%, down $6 this morning. Yum Brands off about $5.50 right now. That's down 7%. Tesla Motors off 2.5%, off $4. Green Mountain Coffee Roasters, GMCR, getting a little roasting this morning, down about 5%, off $3.50. LinkedIn down $3 and change, off $1, about 1.6% out there. Intercept Pharmaceuticals off 4%. That's down $2.60. Our calling number is 877-927-6648. Before we go take a look at some of these stocks and take a look at the commodities and so forth, one word here about the Dow, because it has been the weak link. And the Dow futures closing inside, we'll go take a look at the index as well, but the Dow futures closing inside that June 24th swing point. Now, that had 262,000 contracts on that trading session. The last time down was the low that was put in on August the 28th, and that was with 176,000 contracts. And yesterday closed inside it, but 142,000 contracts. So the Dow, which has been the leader on the way down, losing its energy to actually bust out the lows, a significant low. It's a second test here of that June 24th area. Now, in the case of the Dow, it's broken the trend line, it's broken the channel line, so it'll have some work to get back up and test those areas. We haven't really seen a test of that area yet. We saw a test really of the trend line, I suppose you could say, on October the 4th out there. But we'll want to be paying attention. The number you're going to want to be paying attention to on the future side is 14,731. That's a June 24th. That's the top of the June 24th level to determine whether or not we've got a rejection now on price. We don't have really you could one way to take a look is you've got a rejection on volume, but you closed inside the bar. But volume just simply coming up light. That's how we'll term it. But let's go take a look at the Dow itself. We'll pull that up, and to see what it is trading into, let's go take a look at the shorter term, the daily chart out here, and we'll take a look at that June 24th area. It, too, closing just inside that area. So the number you want to be paying attention to on the Dow today is going to be 14,795, 779. 14,795, 79. Right now it's trading at 14,795, 86, or 1497, 1498 right now. And a rejection, a move above that area. So we know that the Dow is moving down into a high volume swing point, that June 24th area. Doesn't have the volume, hasn't had the volume yet is how we should term it. It has not had the volume yet to bust that out. And so we'll be watching the Dow for some kind of signals today. It closed inside that June 24th area, and certainly it closed below the most recent swing point, which was August 28th. That other number you want to write down, 14,760. If you see it close below that today, that gives you the signal and the all steam, all engines go sign to go test the lows of June 24th, and that number will be 14,551. Now, I mentioned the DAX earlier. Let's go take a look at the DAX, because when I took a look at this chart, I had to keep hitting my update screen to say, is that really what we're taking a look at here? Because the DAX has been relatively strong. Now, the DAX had completed a 1-to-1 A to B equals CD up. That completion was, or the A point, I should say, on this was the low of April 19th, and that was a price level of 74.1836. That's your A point. Your B point was the trading session of May 22nd. In our markets, it was May 21st. May 22nd inside the DAX. That level, 85.5786. The retracement looks like about a 0.786 retracement out here. If we go from our A to our B, see what that C level, and really 0.786 was on the spot out there. It looks like 76.62, maybe a little bit of change. It got down to 76.55 out there. So that's a beautiful thing. So it makes the 0.786 retracement and completes, or very close to completing, the 1-to-1 A to B equals CD. The actual number projection would have been 87.96. It only got up to a high of 87.70, so about 26 points away from that. And it did that on September the 19th. But the pullback here in the DAX, really strong. In our now, when I say really strong, let's just take a look at it off of the hammer low out here from the trading session of September the 4th. So if we go from that low, 8,095.91, all the way up to the high that was came in here on September the 19th. What has stopped it in its tracks thus far? One, it's made a .382 retracement, and a second, what it's done is it's tested that gap up, significant gap up from September 13th to September 16th out there, and that is really strong. That's the strongest of all of the, well, that's not of all the indexes. That's the strongest certainly in Europe, because if we go take a look at the FTSE, we use those two as two barometers for the market out here. So let's go take a look at the FTSE. FTSE, on the other hand, is breaking through swing points. It's breaking hammers. It's got no respect for those hammer candles out there. If we take a look at the FTSE, the hammer candle we're taking a look at, it created three of them out here. You had one from August the 20th. You had another from August 28th. You had a final hammer out here on October the 2nd. It's broken through all of those. If we go from swing point low to swing point high out here, now its swing point high was August 2nd. On September the 19th, as the DAX was making a newer high, we most certainly did not see that inside of the FTSE. And you can see right now, or you should be able to see, let me darken it up for you. Let me do this. There we go. 6280 looks like is the next stop inside of the FTSE. In fact, looks like it's forming an A to B equals CD down. If we go take a look at what that is, your A point being the August 2nd level, your B point being the low on August 21st, and your C point being the high on September 19th. So it's done the 1-to-1 A to B equals CD at 63.49. That was the price projection. Looks more like 62.64 is the number out here where it should head to. That'll make a 0.618 Gartley buy pattern. If we take a look at that, I can go ahead and draw that in advance so we see what that looks like. I'll just change the color on it, and we'll see what kind of expansion we have. So right around there, I guess I probably could have done it a different way. You've got a 1.414 expansion of your C to D level. But it looks like that is where the FTSE wants to travel down to. Now let's go check out. Some of these stocks here that are popping and dropping. And specifically, let's go take a look at some of these here that are just dropping like rocks. Let's start it off with, here's the IBB. I know we get a lot of requests inside the den, and yesterday this thing fell apart with volume. Big volume off of, now in this case here you do have big volume off of the highs because you had wide price spread and accelerated volume. Yesterday down with 2.7 million shares. It really needs to take out the swing point lows back here from August 19th, but it's the first significant sign of breaking down out here. And as far as volume and what it's going into, it's going to take on the candle session from July the 12th out there. That had a total of 2.2 million shares on the way up, and yesterday on the way down, 2.7 million shares. So it's coming in there a bit hot. So watch for the IBB when it gets down into, so the low of that candle session happens to also be where in essence, the low of the swing points are. The low of that candle session, I should say, from July 12th is 188.46. The swing points here are from August 19th, August 20th, and the volume there very light, 856,000, maybe 400,000 shares out there. But let's go take a look at some of these other stocks here that are just dropping like rocks. That is ARIA is the ticker symbol. Ariad Pharmaceuticals, down big time with volume, down 70% this morning. Curious to see if there's any kind of high-volume bar down in this area. We're going to go ahead and probably put this thing. Well, this thing came all the way back to the breakout. We'll go do it on a weekly chart, which is back from 2009, and see if there was any signals out here whatsoever. Well, let's go. Well, yeah, I guess you had your first signal right here. Here's your first signal inside this equity. So this thing makes a high back on October. Looks like October 17th. The high out here was $25.40 out there, and it made that high with about 1.4 million shares. Backs off. The back off here, the retracement doesn't look too bad. I mean, this thing had gotten, as you can see, into the extreme overbought condition. It stayed up there for far too long and made a higher high on less relative strength back here on the 17th of October. The first sign that there were some problems, apparently, or somebody knew about some problems, came back here on December 14th. You had wide price spread and accelerated volume off of the highs. I mean, very close to the high out here. So it was down on that session with 20 million shares. Made its way back. It made a retracement to make its way all the way back to that level. If we take a look at the retracement, maybe from the high of that session down to a low that was put in, 23.23 was your point, 786, 22.15 was your 0.618. It actually made a little doji candle at about 22.49 out there, and then boom, truly giving way today. So this thing is a totally damaged stock. Imagine here not paying attention to the volume off of the highs there. So that's why, that IBB stock that we just taken a look at, the question is that a first sign out there? Because you've got volume off of the highs. And in the case of Ariad, here's how these things work. They usually give you time and opportunity to get back inside there. So in the case of Ariad, it's not giving anybody any more time today because it closed out the trading session yesterday at $17 and change. And this morning, right now, trading out at $5. That is that's a big hurt. That is a world of hurt inside of Ariad. That's down 71% out here. Let's take a look at Priceline. We haven't looked at Priceline. That thing, got over the $1,000 level. Let's go see what kind of volume was coming out of Priceline. PCLN is the ticker symbol. Now it's trading below that $1,000 mark. So let's go take a look at this, see what kind of volume we have here inside of Priceline. Priceline been just one heck of a rocket ship. I mean, this has been, I would have to say, one of the best performers out here as far as large names. If you take a look at the lows back in 2008, right around the $51-ish level, 51, what is that, a 20-bagger? So from $51 up to a high that was put in here, looks like on October 3rd, gets up to, 1074.89, 726,000 shares on that trading session. And yesterday, a sign of weakness, 1.3 million shares. Now, not too bad, though. Not too bad when we take a look at Priceline. PCLN, again, is the ticker symbol. Now, why do I say not too bad? Because this did have a nice sign of strength with wide price spread and accelerated volume on the trading session of August 9th. So this one here is got some damage control to do, but that's it. It's not a damaged stock, at least not as of yet out here. And so we'll see if this area, right now it's trading into that bar, so it's trading into that August 9th area, that wide price spread bar. And the price spread on this candle really goes from $994.98 down to the breakout candle session, which was the August the 8th, the low there of 915.93. So you'd like to see, if you're inside this equity for sure, you'd like to see this thing start to lose its volume to the downside. But it is not in an oversold condition. It certainly was in an overbought condition as it was making those highs back October 2nd, October 3rd, October 4th out there. So far today in trading, 119,000 shares in 18 minutes of trading. Yesterday's total volume, 1.4 million shares. Something to be keeping an eye on for sure, and that is on Priceline. Let's see, what else do we have here working? So we did Priceline, Ariad, Netflix, Tesla. Let's go take a look at Tesla. TSLA is the ticker symbol. Let's go see what kind of damage, if anything, has been done to this equity. This has been on a huge tear up to the upside here. Its first sign of strength really came into this thing April 1st, 2003, when it was 14 million shares, gapped up from a low of $37, closed out that next session at $43 with wide price spread. Well, if I have to back it up so you can really kind of see the price spread on this. It was wide price spread at that time with all the accumulation really here along the bottom, all of this low volume, small-bodied candles, and then the first big-bodied candle inside a Priceline. And you would have had to have filled in the gap. That's why gaps are your friends out there. That came on April the 1st. Right now, the Dow, the markets are flat. Dow's off 71 cents, S&P down 85. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 9 points right now. S&P is down 2. Let's go check out some of these stocks here that are actually popping in the market. You've got Men's Warehouse, MW is the ticker symbol. Now, they received a buyout offer from Joseph A. Banks out here. My understanding that they have rejected that offer. Nonetheless, it is on the table out here. So let's go see where this is trading to. A nice little premium here that it's trading at, well above the little consolidation that it has been traveling within. It's been in really a sideways consolidation. And maybe it's better to look at this on the weekly chart out here. Probably stands out a little bit easier for us to read. So, Men's Warehouse has this big high volume bar, but it's well above that. That's from January 11th, the week of January 11th, 2008. But you can see really been traveling in a consolidation zone from about the December 2010 time frame up until March 9th. Now, the high of March 9th, 2012 is 40.97. You're trading at 43.65 right now. I don't know what else to really tell you about this equity. Maybe they're going to be taken out. Who knows? It's going to probably be a little bit more costly for George Zimmer to get back in and try to take this thing over. It just got more expensive for him. So that's trading at $43.70. Let's take a look at Intuitive Surgical, ISRG. That's trading. That's the second leader in the clubhouse at the moment. That's up about $7 and change. Let's go see what it is doing out here. It's still really just a broken stock at the best. This thing really broke down big time back in July 2013, down with 5.5 million shares out there, trading at 388 right now. Not a lot to be seen there. Let's take a quick peek here before we go off the air. We didn't look at the commodities section or the currencies. We'll take a look at currencies during the next hour. Right now, let's just take a quick peek in on gold and silver. Gold here, I said the key for gold was to be able to clear and close above the October 1st level out there. That could make you a little bit more bullish as it came off of the most recent low. But, as it came off, it has had that nice candle on October the 2nd, but volume there was pretty weak. It was 212,000 contracts going into the downdraft from the day before of 119. But really the session out here was going into, where's the volume on this, 180. Well, I take that back. So volume was not too bad. But it still needed to clear and close above October 1st's high, which is 1337.80. Just really traveling sideways at the moment, so not giving a whole lot of indication of what it really wants to do here just yet. If we take a look here at silver, see what silver is doing, that also did close above the bar that I would have wanted to see it close above in order to get potentially bullish. But you want to see gold and silver lockstep out here, and we don't have that. But silver did close above that October 1st high at 21.97. It's trading right now at 21.96, so it's back inside that lower part of the range out here. We'll see what silver does. I think, you've got to see both of the equities giving you the go-ahead signal, the buy signal out here. If we take a look at light sweet crude, this is certainly struggling to get above its trend line out here, so it's locked in this still in this sideways consolidation box. You could take this box just a tad lower, the 102-ish range out here, so still that's about a 7-point consolidation range that it's traveling in, but it's struggling with that trend line. That's that red diagonal line that comes off of the low of the trading session from April the 18th. The next low out there is June 24th. And if we finish this off, take a look at bonds here. Just another sideways move, small-bodied candle out there. It's most certainly taking a rest. Folks, if you're off to start your Wednesday, have a wonderful Wednesday. Hey, don't forget about that bank. You got 86,400 seconds to use today. If you lose, well, if you snooze, you lose, that's for sure. Take care, folks. Look forward to seeing you soon. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.